in the near term.
Well, what I find interesting, Shannon, is I had, asked the producers to ask the committee members, what sectors do you think are going to do best in Q4? And what specific stocks do you think are going to do best among that? You don't have financials as your top three sectors. You have industrials, tech, and healthcare. John Najarian today doesn't have doesn't have financials among the best. He has energy and tech. Why aren't financials getting more love, Shannon? Aren't they having a breakout or no?
Well, I think it depends on what part of the financial sector you're looking at. And
well,
I do think that there is
I don't know. You didn't say money centers versus private equity or fintech versus this, that, or the other. You don't have any. Neither does John.
I do have financials.
I'm not talking about what you own now. Forgive me. I'm not trying to suggest you don't own it.
As my breakout. No, I get it.
When I say what's going to do best in Q4, neither one of you pick financials.
I don't think this is going to persist. I think that this yield curve move, I don't think we're going to get the veracity of the move that we experienced in the first quarter. I think that there is going to be a desire as we go into the end of the fourth quarter to position in names that are potentially more. I mean, we were talking about at the end of 2019, financials was supposed to be the breakout. They were supposed to lead the value rotation. We've been waiting for this. I just don't think it's sustainable. I think that these companies are disconnected from the benefit of yield curve, the spread. And for me, that's not where I think it's going to do best. I mean, we're equal weight. I mean, they'll be fine, but I don't think that they're going to lead the charge in the fourth quarter.
Now, John, I mean, look, I didn't mean to, suggest that you don't have any exposure in financials. You obviously do. You own Bank of America shares. You own JP Morgan shares, Bank of America calls, Capital One calls, KeyCorp calls, SoFi calls, Square calls, Visa calls, Wells Fargo calls. And you do think rates are moving higher. You told the producers, but yet you don't think financials are going to be one of the best performing groups in the next 3 months?
I think they've already done it, Scott. I mean, you look at JP Morgan, for instance. JP Morgan is up 150% over the S&P 500, a 31% versus 20% or something like that. So I think that, over this period that Prashant gave us to look at from now till the end of the year, I said, okay, I think JP Morgan will get beat by the likes of these energy companies because demand is just up there like crazy. Production has not kept up. And that's not just production and, the exploration companies, Scott. That's midstream. That's, the natural gas BOIL, BOIL, which is an ETF that tracks natural gas. It's a double, it's a leveraged ETF for the upside of nat gas, was up 8% early in the morning. I mean, these are a sector, energy overall, that are going to outperform what banks can do after the banks have already done what they've done. Yes, rates are going to go up. I think we top out 175, 180. I don't think we get over 2 by year end, Scott. But I think banks will just do fine in that environment. And as you just described, I'm overweight in that sector pretty heavy. And you throw Square and some of these others in there.
Sure.
And I'm really strong in the banking space. But I think energy is going to outperform. And I think after rates top out here, people go right back into tech. And then I think tech zooms to the upside as well.
Joe, give me something quick.
Well, you see, I actually think energy has already made its move. I think energy, you want to look for your opportunities in the debt market, high yield specifically. I think financials, yes, rates moving up, that's a bonus. But think to yourself, whether it's all these non-traditional assets, NFTs, cryptocurrencies, right? There's so much liquidity out there right now, Scott, and it's all about the management, pricing, trading of assets. That's why Goldman, that's why Morgan Stanley is doing so well. The balance sheets of these institutions, financials have totally recreated themselves in the wake of the great financial crisis. They're buying back their stock. They're going to experience loan growth, both commercial and residential, if we're going to see this reopening trade. There's so many different tailwinds beyond rates rising that could benefit financials. And I think it's the cleanest and most qualitative way to play the value-oriented strategy if it really is to take hold here through the next 3 to 6 months.